AMD stock is down over 31% in the past 3 months. The beast, the unstoppable beast that is NVIDIA stock, is actually negative versus where it was back in June. Yes, it is down 2% from where it was back in June. Since the week before Christmas, Tesla stock is now down around 19%. Palantir stock since Christmas Eve is down over 20%, which puts it into definitely a major correction area now at this point in time. You even have weird stocks like Boston Beer Company just kind of falling out of bed. Past month, this stock's down over 19%. Bath and Body Works, which everybody knows for the soaps and the candles, right? That stock's fallen about 8% in the past month. If we pull up a 1-month chart of the Qs, think of that as the NASDAQ, the S&P 500, the Dow Jones Industrial Average, and the Russell, we're going to see something pretty interesting. The Russell's down over 8% in the past 1 month. Now, you usually call a correction in an index anything that's around 10%. So the Russell's very, very close to actual correction territory now at this point in time. Dow Jones Industrial Average down over 5%, S&P 500 down 3.5%, and the NASDAQ's down around 3% in the past month. So it's clear as day there is major weakness going on in the market. We're definitely I would call it a little bit more than a pause in the past month. I would actually call this some actual real weakness starting in the market, right? Nothing out of control yet, but definitely more than a pause. A pause would be kind of like all these indexes for the past month, kind of being around break even or maybe down 1-2%. The fact that some of these indexes are down 8%, 5%, that's a little more than just a pause in the market. So 4 core subjects we're going to speak about in this one here today. First one is, why is the market getting so weak? Okay, I think this is an important subject. I got to cover this right off the top. Second subject we'll speak about is, when is this market going to turn back positive, where the indexes start going back up for real, stocks start turning around, things like that. Okay, so we're going to speak about that. Third thing we'll get into is some bad news for a stock that I personally own, and we're going to talk about how much of bad news is this. Could this cause the stock to crash? Not what my plans with it. Am I going to buy more of the stock? Things like that. Okay, we'll discuss that in this video. Fourth thing we're going to get into is the best stocks to buy over this next few months period. We're in this kind of volatile time now, right? We know Trump's getting in office here in what, week and a half, 2 weeks from now. So we're going to have a lot of things happening. Earnings season's coming. What's the best stocks to capitalize on this next few months? So we'll speak about that, okay? Appreciate y'all joining me as always. All I need from you guys, one thing only. I got the sign in my garage. It says it right there. Smash a like button. I hope you guys should do that for me here today, doing a video on a Friday late afternoon for you guys, because I know, we got drama in the market, and I know you guys were looking for a video. So I appreciate it. That's all I ask in return. If you want to subscribe to the channel, you can certainly subscribe. Additionally, if this is your year to start taking investing serious, click the pinned comment down there, fill out a form. We'll see if we can get you access to my private stock group so you can get access to my entire library of premium courses, my private Discord chat, access to the research platform, which is 1000xstocks.com, which is a must to take your investing game up to a much higher level. Don't let this year just be another year that a lot of people, this is what happens. Like the market goes down, stocks start going down. People say, I'm not going to buy now. I'm going to wait, right? And then they look back a year or two later and like, gosh, why didn't I take investing serious at that time, right? That's the same thing that happened in 2022. There's a lot of investors, and maybe even some people watching this video right now. There's some of you guys that look back at those prices stocks were in 2022 and you're like, why was I not buying stocks in 2022 when all the best tech stocks are crashing, right? Don't let another year happen where you let it go by, you don't buy, and then you don't take advantage, you don't take investing serious, and it just flies by, and then you look back and you're like, oh, stocks were such great deals and I didn't buy them. Don't let this year just be another one of those years. Take advantage, okay, folks? Alrighty, first one up here. Why is this market getting so weak? Alrighty, here's what's going on. It's very important everybody understands. Jobs report comes out today. Strong jobs report, right? Now, first off, you would usually think like strong jobs report, great news, right? Like, what do you want? Unemployment to be high? Well, you want everybody to lose their jobs? Was that cause the stock market to go up? But we're in a weird time for the stock market where it looks at a strong jobs report as actually a negative. Yes, I know, it's weird times, okay? Good news for the economy, but not for the markets, at least for now, says Scott Wren, who's Wells Fargo's Investment Institute Senior Global Market Strategist. Holy smokers, let's give him even a longer title. This ain't no dang jokers. However, this unexpected gain relative to consensus projection does not change our view that the labor market will likely deteriorate in the further coming quarters. So here's what's going on. Traders now give 97% odds, almost a guarantee, that the Federal Reserve is not going to lower interest rates in January. The market wants lower interest rates. The market wants the Fed to continue to lower rates. Now, the market believes that the central bank will hold rates where they are in the March meeting as well, based upon Fed funds future trading. Odds of a March cut fell to around 25% following the jobs data, down from 41% odds a day earlier. So, why does a stock market want rates to go down? The stock market wants rates to go down because the way the market thinks is rates go down, stocks go up, okay? It's not always the way it works, by the way, but that's the way it thinks right now. Also, strong jobs report makes people worry about inflation coming back. If inflation comes back, the Fed can't lower rates really anymore, right? And at the end of the day, the Fed could even consider raising rates, let's say 6 months, 12 months, 18 months from now. And that freaks the market out in a substantial way. And then you get into worries about the 1970s, right? Worries about stagflation, an ugly term that everybody freaks out about, right? And all those sorts of things. So that's what happens when you get something like this. The market actually would rather have a weak jobs report right now, which is, once again, weird, but that's the times we're in. Now, this reminds me very similar to shortly after I got in the stock market, okay? This is an old picture from many, many years ago, 15, 16 years ago or so, right? When I was a brand new newbie in the market. I was working a shift here at Walgreens. I don't think I ever had my name tag straight, man. But I was just getting started in the market back then, right? Had a few $100s to my name. And then as I started to build over the next few years, there was an interesting phenomenon that was going in the market the first couple years I was investing. And it's very similar to right now. What this phenomenon was essentially, this is very early on in my investment journey, a few years in, right? So I'd watch a lot of CNBC, didn't even know a lot of the terminology they were talking about, but I would just kind of pick up on things, listen, and just kind of learn. And because this is way before YouTube was a big thing and whatnot, right? In terms of investing communities and stuff like that. So there was an interesting phenomenon going on where essentially people kept bringing up this term called double dip recession. And so we started to come out of the great financial crisis, started to come out of that recession. Markets were rebounding. But over the next couple years, 2010, 2011, people were really worried about we're going to have a double dip recession. The employment market's going to tank again. Unemployment's going to go up majorly, right? And there was all this fear about that. And it would cause a market to go down short term. And so if you pull up a stock market index of 2009, 2010, 2011, overall, you'll see a trend where the market went higher. But in that trend of the market going higher, you had some significant drops. Where all of a sudden, out of nowhere, in a matter of a few weeks, a month, 2 months, the market would drop 5, 10, 15%. And it would be on the back of this fear because basically one jobs report would come out or 2 jobs reports would come out and it would show a little weakness. And so people are like, oh boy, we're going to tank again. Economy's doomed again, right? And so people would just freak out over this. The overall trend was things were getting better. But all it would take is 1 or 2 bad reports and people would be like, oh boy, the unemployment market's going to tank again, the economy's bad, earnings going to tank, all that sort of stuff. So now we get the same exact thing going on, but it's just different in terms of now the worry is, oh, economy's too strong, too many jobs, inflation comes back, and Fed's going to have to raise rates. They're not going to be able to drop rates. And so you're going to have this, let's call it anxious feeling in the market because the market's still traumatized from 2022, right? The S&P 500 at peak to trough in 2022 was down 25% at one point. The NASDAQ was down 37, 38% peak to trough. That causes trauma to the market, right? That causes trauma to investors. So there's still this built up fear around inflation coming back. What's the Fed going to do? All those sorts of things. And we're going to have to work through that. We're going to have to work through that trauma for the next 1 to 2 years until we get so far removed from 2022 that everybody just forgets about it, right? And then we move on from there. But for the short term, we got trauma that we got to deal with. We got to deal with that, right? And so that's what's going on in the market. And you look at the 10-year Treasury, right? 10-year Treasury just keeps going up and up and up. This is from the time period that the Fed made that first cut, right? In the Fed funds rate. And look at it ever since then. The 10 years just continued to head higher and higher and higher. And at the end of the day, there's a lot of folks that believe that if the 10-year Treasury just keeps going up, stocks aren't going to go up, right? Meanwhile, you have the TLT, which a lot of people were positioned into this TLT over the summertime and into early fall, thinking that TLT was going to be the play, and it just keeps going down. You had people playing TMF, right, which is like a 3x leverage on the TLT, thinking, oh man, the TLT is going to go skyrocketing here. And we've just seen literally the complete opposite of this. TLT just continues to go down, and people are just getting wrecked left and right, especially a lot of the folks that are playing, these 3x leverage plays on this. Listen, when you want to play those 3x leverage plays on something, you better be good with your timing, because otherwise the pain is going to be severe on the downside, right? And I'm sure at some point in time, TLT will be the play, but, your guess is as good as mine in terms of when that starts to pop again, right? So that's what we have going on here. Now, if you look today, you look at the indexes, getting hammered, Russell, NASDAQ, all those sorts of things, Dow, S&P 500. But the public account actually holding up pretty well today, down 0.77% here, outperforming the market quite significantly. But why is that? The reason that's going on, essentially, is one position. It's called Meta. It's the biggest position in the portfolio, a $3 million plus portfolio, but over $1 million of that's in Meta, right? Meta's having a good day. And so, if you own a few special stocks, they can help you outperform the market on down days, and they can help you severely outperform the market on those up days. It's all it takes, man. A few really great companies can transform your portfolio in such a major way, right? Now, let's speak about when this market's going to turn, right? And we can start talking about the indexes start going back up, stocks start going up, the big dog stocks start going up, and all those sorts of things, right? When's this market going to turn? Well, I don't know if you guys follow me on the Reaction channel, but I thought an important video last night, right? It was like a 46-minute video reacting to a few different videos there, but I spoke about when I think the market's going to turn. By the way, thank you so much, everybody that supports over that channel. 70,000 subscribers now on the Reaction channel. That's insane, man. So I appreciate y'all for being here. I just got to say this. I just hit 9 years on YouTube, right? 9 years on YouTube. And it looks like that Reaction channel will be on pace to hit silver play button status, which means 100,000 plus subscribers at some point this year, which is insane to think, because that will be my fifth silver play button on YouTube, which, this has never been done before. This has never been done before in the history of stock market YouTube. People are fortunate if they can ever even get one silver play button. It's an extremely fortunate feeling to even get one. And to be working on my fifth, insane. I could not do that without you guys supporting year after year after year after year, right? And I'm thrilled that I still have the work ethic to put out there. And the thing that always gets me is I always think because sometimes I'm like, man, I don't know if I want to do YouTube anymore, because YouTube's a tough game. They talk about in the NFL, lifespan is not very long in terms of you last in the NFL. I think the average running backs out of the NFL within 2.5 years of entering, right? YouTube lifespan is very short. And the reason being, it's taxing, man. Trying to worry about everything all the time, public image, you got people making videos about you, right, to get clicks and get views and all that stuff. It's a tough place to be. And to be able to do it year after year after year definitely takes a lot. And so a lot of times I think how much longer am I even going to do this? And the thing that always gets me through is I always think I'm going to get them through the next crash. And then after that crash, I'll take off after that. And it's always I always keep pushing it off, right? And so I used to think about that back in the day. And then we had the 2018 drama where the market just tanked at the end of 2018 when we came out of that. And then I was I'll get them through one more crash. And then we had Rona crash, right? The fastest stock market drop in history. That was crazy. And we came out of that, right? And then I was like, oh, let me get them through one more crash. And then we had the 2022 crash. And now I'm like, let me get them through one more crash. And so that's the thing I always push out. But man, I appreciate you guys. I just need to say that. I'm going to get that off my chest because I appreciate you guys huge. And this has never been done before in the history of YouTube. And I don't know if it will ever be done in terms of this level of success in the stock market space is crazy, man. But thank you. But anyways, in regards to that video last night, I talked about the market could change very shortly here. And the reason being is when you look, all the biggest companies that matter the most to stock market, the biggest weights by far, right, are what? Apple, Microsoft, Google, Amazon, Meta, Tesla, these sorts of companies. All of those companies are going to be reporting earnings within the next 4 weeks specifically. So here's the deal. If those companies come out, beat their revenues, beat their earnings per share, have good guidance, have good yearly guidance for 2025, it's going to be hard to get the stock market down much more after like this week, essentially, this upcoming week I'm talking about. And I wouldn't be surprised if we start trending higher at that point in time. Now, on the flip side, let's say if Microsoft, Google, Amazon, Meta, Apple, Tesla, let's say these companies' guidance is very shaky, cloudy, murky, about 2025, that could lead to more of a negative sentiment. And that could actually pull us down basically in February and March as well, okay? So, but at the end of the day, like if these companies come out and good things, you're not going to be able to get this stock market down pretty much after next week, essentially, okay? So things could flip very rapidly here. Now, the thing you're going to understand about the stock market is the stock market literally has ADHD. I'm not kidding you, okay? As they say, ADHD in children. Easily distracted. Does that sound like the stock market? Yes. Daydreaming. Does that sound like the stock market? Yes, the stock market loves to daydream. Forgetfulness. Oh, yeah. Can't sit still. Excessive talking. Oh, yeah, that sounds like the stock market. Careless mistakes, risk-taking behavior, and impatience. Is that not the stock market? Yes. So you understand everybody's worried right now about a resurgence of inflation. Fed can't lower rates. If all of a sudden 2-3 weeks from now when all these companies start reporting, all the numbers are great and the guidances are great and the management commentary is great and the conference calls are great, right? Listen to those on 1000xstocks.com. Guess what's going to happen? The stock market's going to completely forget about, that's right, we were worried about that inflation. We were worried about that strong jobs report. It moves on so quickly, it's not even funny, right? Then after that, another month or two can go by, and then all of a sudden it starts to look around. What do I have to worry about now? Then something happens in the jobs market that it likes or doesn't like, and then all of a sudden it's focused over there. But the market gets extremely distracted. Like, as somebody who's been in this market 16 plus years now, it's always something. There's always something that's worried about. Oh, it's this thing. Oh, it's over here. Oh, it's over here. And it just changes several times usually throughout 1 year. The market will get distracted. And all of a sudden it's paying attention over here. Now it's over here. Now it's over here. Now it's over here. Now it's over here. It's just what happens, okay? And so then at the end of the day, you've got to understand when you're dealing with the stock market, you're dealing with a entity that has massive ADHD. And whatever they're talking about today won't even matter in a few months from now or a few weeks from now, and certainly not in a few years from now, right? I said this recently. I said, I don't give an F what my stocks are doing. I was actually talking to the private stock group recently over the next 3 weeks, even the next 3 months, right? I care about where my stocks are 3 years from now. No, somebody said a comment, and every once in a while I get this comment. They're like, oh, easy for you to say, you're part of the 1%. You're so rich. People shouldn't listen to that. You should care about where your stocks are in the next few weeks, next few months. No, it's the same thing when I was a broke joke and I had $300 to my name, $500 to my name, $1,000 to my name, $5,000 to my name. It was the same thing. At the end of the day, you shouldn't give an F where your stocks are priced 3 weeks from now or 3 months from now. What is it going to do for you as a long-term investor? Well, what does it matter? Like if Meta's $500, $600, or $700 a month from now, does it even matter? No. Like, cool, it just says a bigger number or a lower number in my portfolio. I'm not planning on selling it right now, right? Like as a long-term investor, that's the way you should think. If, AMD stock, which I'm buying heavily right now, if all of a sudden it goes from 110 something to $200 in the next few months, I don't care. If it goes to $80 in the next few months, I don't care. I would rather have it go to $80 than go to $200 because I'm planning on holding that stock for the next several years. And I'd rather buy shares for as cheap as possible. And it's sad that some people don't have a brain that can comprehend that. I think the majority of you guys watching this, thank goodness your intelligence level is up to a high enough level that you can fully comprehend that. I would say 95% plus of the people watching this right now, you get it. Like, yes, like I want my stocks for cheaper in the short term. I'm not retiring tomorrow or the next day or the next day. I don't care. Like, all I want to do is make a lot of money over the next several years. And I'd rather buy stocks. Like, if you told me, could I have the Dow at 22,000 tomorrow instead of 42,000? Of course I would take it at 22,000. There'd be steal deals like, you would put money in almost anything and make money over the next few years, right? That's the way you got to think. And so, it's sad that there's a few percentage, a very small percentage that don't get it. They don't get it. But I'm very thankful that I think the majority of people, the far majority of people watching this video right now get it. Let me know in the comment section if you understand this concept. Just say long-term investor, okay? Something like that. I hope everybody, like I said, I think 95% of people get that game, but it's unfortunate that a few percent, they just don't get it, man. And unfortunately, those people will be broke for life. They will never, have money. Truly, if you cannot wrap your head around long-term thinking, long-term investing, what separates you from just being a monkey? Seriously, I'm not kidding you. One of the most amazing things about humans is you can essentially delay gratitude, right? Or delay rewards, let's call it that, right? You can delay reward opportunity. And animals, they're not so good at that, right? But as a human, you can delay a reward, right? And so that's beautiful. That's special. It's a gift. It's truly a gift, man. And if you got it, you got it. And if you don't got it, sadly, you're never going to get it. That's just the way it works, unfortunately, right? Alrighty, next subject up here. Let's talk about some bad news for a stock I own. How bad news is it? What I'm planning on doing with this stock. And then let's talk about some of the best stocks to buy for the next few months. So recently, Bubo has gone absolute beast mode, right? Absolute beast mode. These are shares I have in the public account. We went from being pretty negative on this position to up 125% in it. It happened like that, man. Things can change in the market very, very, very quickly, obviously, with the Disney partnership and everything that's going on there, right? And I spoke about that. If you haven't been brushed up on the whole Fubo situation, watch this video from 4 days ago or so. I think that one will get you up to speed on everything that's going on with Fubo, the opportunity there, and those sorts of things, right? Now, what's going on here? So, DirecTV says Venue still anti-competitive following Disney deal. Satellite provider joined EchoStar in criticizing the deal. Disney plans to merge Fubo with Hulu Plus live TV service. Pay TV provider DirecTV wrote a letter to a federal judge Thursday that a recent settlement between Walt Disney and Fubo doesn't resolve antitrust issues around Venue, a planned sports streaming service. DirecTV said Venue, a joint venture between Disney, Fox, and Warner Brothers, would offer content that DirecTV and other distributors aren't allowed to, and that the company is concerned about the impact Venue would have on competition for sports programming. Satellite TV provider EchoStar wrote a similar letter on Thursday, right? So, okay, first thing is here, right? The first thing I would say in regards to this, right, is I don't think DirecTV's attacking this at the best time possible, okay? Listen, we got a new administration coming in office here in the next, less than 2 weeks from now. There's going to be a lot of focus other places, and there's bigger fishes to fry out there than, let's call it, this whole situation that's going on, right? The time period to really get the attention of this, because they even got Fubo got a lot of politicians, big name politicians involved in this. They got them involved, kind of over the summertime and whatnot, right? And so at that particular time, it was a great time period. Now you got a new administration coming in office. Trump's going to be making all types of moves, doing this, doing that. Everybody's attention is going to be there, right? And so trying to get attention to this little subject over here is going to be tough at this point in time, and especially given that the main company that brought up these problems is basically says this is all good now. That makes it even double tough. So it doesn't mean it's impossible for DirecTV to somehow block this or changes to be made, but there could be changes that were made that could be made where essentially Disney could say, you know what, we're going to allow you access to this and for other sports packages and things like that. So that can certainly be something that happens as well, okay? Where Disney can make deals in the short term with DirecTV, EchoStar, these sorts of companies, and say, you know what, we're going to do this, we're going to do that, and allow you to do this, and then DirecTV kind of goes away as well, right? Because their complaint kind of goes away. So that's something to keep in mind there. Now, additionally, let's say, and I still think there's a higher probability the deal goes through and it's all good versus doesn't go through. But let's say hypothetically it doesn't go through. Let's say DirecTV kicks up a big stink and these guys kick up a big stink and somehow the deal doesn't go through. A few things to remember. One, $130 million is to be paid out to Fubo, according to their statement around this, if for any reason the deal does not go through. $130 million, okay, Fubo is still supposed to receive if the deal somehow got blocked. Secondly, at that point in time, Disney, if they wanted to, could just buy outright Fubo, the whole company, right? Maybe they buy it at $5 a share, or $7 a share, or $10 a share, $15 a share, whatever the amount is, right? That could always be something that's going to be done. And with Trump getting in office, they're supposed to be a lot more friendly to deal making than certainly the previous administration was. And we know Linda Khan is out. She's leaving I think she's leaving this month, if I recall, right? So it's supposed to become a lot more deal friendly. So there could always be a situation where, let's say, once again, there's a higher probability the deal still goes through and Fubo is going to have just a great next 5-10 years if that's the situation. But if the deal gets blocked, Disney might just look to buy him out, because then they can say, well, why did we just pay him out $130 million in this deal? Why not just buy the whole company out, right? And then David Gandler could still run the show. I don't see why that couldn't go through too. So there's a lot of optionality here in regards to this. Also, Fubo's now built a much closer relationship, I think, with ESPN, with Disney, and some of these guys. So if they had to be standalone, I think they're in a much better position. Plus, they get the $130 million if it doesn't go through, right? Than certainly where they were prior to this. It's not even a question. So once again, this is why I keep talking about Fubo as like it's win-wins across the board. Like even if you somehow this gets blocked, like they're still going to put themselves in a win. Like David Gandler played a hell of a game of chess, man. He played a hell of a game of chess in this situation, and I'm sure he contemplated all these different angles. So that's kind of my theory. Now, I'm also not buying the stock actively right now. I'm just holding my shares, because my thing is like, let's say the deal gets blocked and the stock goes back down to $3 or $4 or something like that, right? That's always a potential. But then once again, Fubo would then get the massive payment. They also have a better relationship with ESPN. And then also, I think if the deal got blocked, I think at that point in time, there would be a lot of talk and chatter about Disney just buying out Fubo straight up. And I think that would be hard to block, given that the new administration is likely going to be much more easy on deal making in this space, right? So, yeah, and DirecTV can make these complaints and things like that to the judge, but I just don't know, if they're going to be able to do anything there. So like I said, all I'm saying is there's going to be a lot of focus in a lot of places, and there's going to be a lot of changes that happen over this next few months here. Okay, so yeah, that's that. Next subject to speak about, what are the best stocks to be buying right now? So these are the sorts of companies that are best to buy right now. Okay, listen, you want companies that have growth in 2025 and beyond. A lot of expected growth, revenue and profit growth. The more the growth, right, the more the growth is expected, the better off you are. You don't want to cut it close. You want companies that can, because the thing you got to understand about growth in revenues and profits over time, you can grow out of a lot of problems. If you've got growth, you can grow out of a lot of problems, right? A lot of problems. And you even look at Fubo with how much money they were losing, but at the end of the day, they had great subscriber growth, revenue growth, and they were able to kind of grow out of a lot of problems and get Disney's attention and those sorts of things. If you have major growth, it's just easier. Your life becomes a lot easier if you got major growth, right? No different than if you're a basketball player. If you grow a lot, like your life is a little bit easier than if you're a short player in the NBA, right? So that's the first thing. Second thing is strong balance sheet. You got to own these companies, have strong balance sheets. Listen, everybody's been banking on rates going lower, and they're not. Like, rates are still among the highest they've been in years, in 10, 15 years. This is why companies with strong balance sheets. What is a strong balance sheet? Big cash position. The lower the debt levels, the better off you are. Big cash levels. And the reason being is you got to be able to weather any storms, whether we get in a recession in the next few years, a stagflation cycle, whether rates just remain high. Let's say it's a good economy, but rates remain high. Listen, if you got a strong balance sheet, those aren't really concerns for you. If treasuries, let's say, go spiking up over the next year, if you've got massive cash load around, you're looking great. You're looking great. They're great, right? That's no problem for you. That's no issue for you if you've got a strong balance sheet. Third thing is proven business models. You want proven business models that have been around 10, 20, 30, 40 years, right? That you've been able to see them get through different cycles in the market, right? High inflation, low inflation, recessions, great employment market, bad employment market, all those sorts of things. And the fourth thing is you want a low forward P based on future growth. The important thing you got to understand about forward P, right? This is where a lot of people get confused, is they assume like just a low forward P is good. No. A low forward P based upon future growth rates, that is good, okay? So let me give you some good examples here, okay? Looking at 1000xstocks.com here, right? Looking at AMD stock. AMD stock, tremendous opportunity right now. Why? Well, the company trades roughly in market multiple kind of range. The forward P is around 25 for the stock. But here's the thing. The company's expected to have triple-digit earnings per share growth next year, and revenue growth, analysts are at somewhere around 26% for the company, right? So let's say they miss analyst expectations next year and they only grow revenue 20%, right, or 15%. That's still a really good number for a company that has a forward P of 25. No, if they come in with a 30% revenue growth, a forward P of 25 doesn't even make close to sense. Like, that's way, way, way too low. So whichever way you slice it, AMD stock is a steal deal right now, right? You look at a stock like Meta, same exact thing. Company trades at a forward P roughly in where the market's trading, right? Meanwhile, you got double-digit expected earnings per share growth, double-digit revenue growth over the next several years, and you're going to be able to see that for years and years to go in the future. So Meta should not be trading at roughly a market multiple when it has way better growth than an average stock in the market, right? So that's a way to think about forward P versus growth rates, right? Because you could find a stock that has a forward P of 12 and think like, oh, this is a great stock because it has a forward P of 12. Does it have future growth? If it doesn't have future growth, then it doesn't make it a good deal. It does not make it a good deal. You got to come with good growth rates. If you can come with good growth rates and you got a forward P in the 20s, steal deal. You're stealing money at that point in time. And that's why I view like AMD stock right now, I'm like, this is a steal deal. Like, are you kidding me? I think we'll look back in a few years from now and be like, can we remember getting AMD at, a little over $100 in 2025? Like that's the way I view that. By the way, in regards to Meta, I don't know if you guys have seen this, and I haven't watched the whole Joe Rogan interview yet. I've only seen clips here and there, but this is interesting. He was saying essentially they haven't really innovated anything great in a while, talking about Apple, right? Steve Jobs invented the iPhone, and now they're just kind of sitting on it 20 years later. Apple basically squeezing people with a 30% tax on developers, making it tough for other devices to connect. If Apple removed all their random rules, we'd make twice as much profit, and that's just us, right? And Zuckerberg's got the same exact view. I think he might watch the channel. He's got the same exact view as I have. I've been an Apple customer for, I don't know, how many years now. Probably getting close to 15 years or so, roughly. Actually right around 15 years I've been an Apple customer, right? And as an Apple customer, the thing is, and I did this video over a year ago. It only got 35,000 views, but I'm like, that freaking video was so good. And the reason it's so good is because I understand so much about Apple. I've been a shareholder of that company many times over the past 15 years on and off. Semiconductor companies that do business with Apple. I'm a huge Steve Jobs fan. I understand the whole backstory of Apple on a high level and all those sorts of things. And the strategies that they used to implement under the Steve Jobs and Johnny Ive days versus the Tim Cook days. And that's a freaking masterpiece of video. It's a shame it never took off or anything. But anyways, the moral of the story is here in regards to Apple, the Steve Jobs, Johnny Ive days, it was always about building the best device, and people will buy from Apple because they build the coolest, most innovative devices at that time. The Tim Cook era is very different. This is an era marked with, we're going to, basically be a tax on the developers, and we're going to do whatever it takes to just keep people locked in the ecosystem. And that makes for a good business model in the short term, but it will be Apple's fatal flaw long term, because eventually people will get out of the ecosystem. So, for instance, for me, like if my iPhone breaks, I'm going to buy another iPhone. Is it because it's the best product? Absolutely not. I'd almost guarantee you there's better products in the market from Android than an iPhone. I only do it because if I go away from the Apple device, it's just like, it's going to make my life harder in terms of like all the cloud, the pictures and the videos I have of all my kids, and like trying to transfer that over to something else, right? In terms of like, most of the people I know have iPhones, and messaging is a lot more complicated from Android to iPhone. Anybody that's experienced that, you know that, right? And Apple does all these little things, like getting my text message to my tablet, my computer. Like Apple does all these little things that they kind of lock themselves in ecosystem. So people buy Apple products more and more, not because of the best devices, simply because they're locked in the ecosystem. And that's exactly like people like myself, people like my wife, like we're all locked in this ecosystem that we can't really get out of right now. Someday we'll be able to break out of it, but we can't really break out of it right now because it's too inconvenient because of a lot of the things that they do with their business model, right? And obviously politicians turn a blind eye to this because obviously Apple, they fill up a lot of pockets. That's all I'll say about that, okay? No, and also, I don't even want to go down those rabbit holes. Okay, so next up here, as far as some other stocks to buy in this opportunity, I've spoke about a lot of them here recently. I did this video a little over a day ago, 5 stocks to buy now the next 90 days. I did this video, 7 stocks to buy now, January 2025. I spent $27,000 on these 6 stocks. Nike stock is easy money. Buy AMD stock and don't stop buying. Oh, I think that one's going to age so well long term. Like, as I spoke about in that video, I said, you want to buy every AMD share you can get your hands on the next 3 to 6 months. And I think that's going to age so well. I really do, because I think people that are buying AMD stock over this next few months are going to look back in a few years from now and be very, very happy campers. I could be wrong. That's fine. I don't think I am. And I put my money where my mouth is, man. I'm buying AMD stock heavily. I just bought AMD stock literally today, right? In several portfolios. And so that one continues to just be a great opportunity. And, short term is what the short term is. Like, people just need to be thankful. Like, if you can get AMD shares at $100-something right now, just be thankful. That's all I'll say about it. Be thankful. Be thankful. Send AMD down to $55 again like it was in 2022. Send it down to $75, $95. I don't care. Like, whatever it is, I think I'll look back 3 years from now and be like, thank goodness I was buying AMD stock. But we'll see. We'll see. I think I'll be right. Right a lot more than I'm wrong, right? All right, guys, appreciate you joining me. As always, thanks so much for being here. Pin comment down there if you're looking to take your investing game up to a much higher level in 2025. Don't let this be another year that passes you by. You don't take this stuff serious, and you look back and you're like, man, I wish I would have been investing in 2025. I wish I'd been buying stocks. I wish I'd been taking advantage of that stock, this stock, that stock, this stock, right? And I teach you everything that you can make your own decisions, and you go through the course curriculum and learn on a high level, right? I can teach you all this stuff. It's there for you. Like, why would you not want to take advantage of it? I mean, it's crazy. Like, it's right there for you. All right, pin comment down there. Much love and have a great day.